everyone. We are now live, and we are live streaming to four different platforms. Jared, let's jump right on in it this morning.
All right, everybody. Good morning and happy Friday. Welcome to the P.I.L.L method, how to pay off mortgages in 7 years. And today you're going to be getting some amazing information about amortization schedules and your mortgage and your student loans and your credit cards and how to look at interest costs versus interest rate. And this information is going to save you thousands and thousands and thousands of dollars in 2022. And we would love for you to spread this knowledge and spread these cost savings and this generational wealth building with your friends and family. So if you're in Clubhouse, we'd love for you to click this plus sign and invite as many people in the room as you see fit. And if you're on Facebook, Twitter, LinkedIn, or Facebook, LinkedIn, Twitter, or YouTube, go ahead and click that share option and invite some of your friends and family into the room as well. This is going to be a great session. It lasts 2 hours. We'd love for it to be interactive. So as you hear what the P.I.L.L method is and how it can apply to your life, feel free to come on stage if you're on Clubhouse and ask a question. There are no dumb questions. And if you are on any of those platforms that I just mentioned, feel free to leave a comment with a question. And Kirk is going to be monitoring those comments, and we will pause and address your questions or comments as well. If you're on Clubhouse, make sure that you go to the top of the screen where the green house is and go ahead and follow the club. And go ahead and invite other members to join the club as well. And when you're in the greenhouse, you can read the about description if you've never heard of the P.I.L.L method before. And I'll give you a little preview as to what you can expect in this room. And so what we're going to do first is have Don introduce himself and give you a breakdown of what you're going to be able to learn today. And then we're going to go with some moderator introductions so they can tell you a little bit about themselves. And then we're going to start answering questions. So again, this is a 2-hour session. It never fails. In the last 30 minutes, we'll have a ton of hands raised. So I highly recommend, if you have a question about your refinance, your student loans, your car loans, or anything related to your debt, to go ahead and raise your hand and come to the screen. And if I have any issues with my audio, please let me know. I'm at my parents' house. I see the red bar popping up, but so just let me know in the back channel or let me know if there's an issue, but hopefully there's not. And I'm excited for today's room as always. So with that being said, I'm going to pass the mic to Don so he can introduce himself and let you know who he is, what's the P.I.L.L method, and how it can benefit you and your family.
Good morning, everyone. My name is Don Daniel, and I am the founder of P.I.L.L Method International, a better way to eliminate debt. There's actually a book by the same name on Amazon, which is a #1 bestseller. Out of 33 million titles on Amazon, this is the only title, the only book that explains how amortization works, meaning how the bank makes their money through charging us interest, and how to defeat it. The only one out of 33 million titles. So listen, folks, and the reason why I was able to write that is because of basically one thing. I have what's called Asperger's, which is a mild form of autism. So when I look at an amortization schedule, that schedule that the bank gives you when you get a loan, I see the patterns there. It's I see things in patterns and pictures, and I understand systems. So when I look at that thing, it jumps out at me that says, "Why are we doing it this way and paying 75% more interest than we need to when we only have to do something slightly different and pay off this and cut our interest costs by 75%, pay off all of our debt, not just mortgages, but all of our debt in an average of 7 to 9 years without changing the budget and without sacrificing lifestyle." It can be done, folks. We've been beaten up for years, and what we're talking about today is not taught in financial education anywhere in the world that I've seen. So here's what we're talking about. P.I.L.L method stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. When you understand those four basic ideas, you get the foundation of what we're talking about now, the new financial literacy, because the old keeps us in debt forever. 9 out of 10 people that you know, and I'm going to repeat this, 9 out of 10 people you know with a mortgage will never pay it off. There's something wrong with a system that indicates that 9 out of 10 people that you know will never pay off a mortgage. That is ridiculous. We're here to combat that. We're here to do something about that. We're here to tell you the truth about how lending works. Back to you, Jared.
All right. So if that doesn't motivate you to ask a question, because when I told my parents about the P.I.L.L method, their minds were blown, and they were like, Jared, if we would have known about this in our early 20s, our financial situation, our property ownership would look completely different. So like if my parents reacted like that, and every person that's stepped in this room reacts like that, real estate professionals with multi-millions of dollars in sales of real estate, minds have been blown as well. So come on stage, ask a question. The banks do not want you to know this information. They do not teach this information. So do not feel bad that you don't know it. And don't be upset with your financial professionals if they don't know this either. Don is really evangelizing something that's changing lives. And we'd love for more people to be in this room. So definitely click that plus sign, invite people in the room as we go through these moderator introductions. And yeah, we're going to go through these examples. So my name is Jared Albritton. I've been in the tech space for 15 years. My goal on Clubhouse and all social media platforms is to increase diversity in tech. If you'd like to see what I'm up to, you can go to my 10K card. It is Jarrett, JARRETT10K.com. And you can see what I'm doing on Clubhouse and other social media platforms. With that being said, I'm going to pass it to Kenyatta, who will introduce herself, and she will also tell you how you can see these examples live on your computer or iPad, so that you can see the visuals of the amortization charts, schedules, and the calculators. So with that being said, I'm going to pass it to Kenyatta, the Way Down to Y CEO, Kirk, and the Credit Goddess.
Good morning, good people. My name is Kenyatta. You can find me at kenyatta10k.com. That's KENYATTA 10k.com. And I'm your real estate professional in the state of Illinois, soon to be Georgia. And I'm also your commercial lending officer, lending you on your projects and as well as your business purpose loans. Today, I'll be here helping you gain access to this phenomenal information. And so what I would like to ask of you now is for you to go to ice10klive.com, click the link that says Clubhouse Simulcast, and then pick which way you want to view it. Do you want to go with Facebook, LinkedIn, Twitter, or YouTube? And through our girl Tiffany, the Y CEO, we're streaming from Twitch and Wisdom. So pick your poison and learn.
Yeah, this is Jared. Just want to jump in. If it's possible for you to go to your laptop or iPad to go to ice10klive.com versus clicking the link at the top, we'd really, really love that. The more people in this room, the higher it goes in the hallway. Plus, if you have a question, you can hop on the stage, talk to Don, and see the example at the same time. So if you do have a laptop or iPad, definitely go there and type in ice10klive.com and stream it or see what Don's Pearly Whites on YouTube, Facebook, Twitter, or LinkedIn. So with that being said, that's the Wise CEO.
I was on mute. Hi, everybody. I'm Tiffany, the Y CEO. It's just such an honor to be here. I feel like we're a family. I'm just so honored to be here on the stage because we're giving you the keys to your financial freedom. Well, I'm the Y CEO. I'm an executive coach. I finished my certification tomorrow. I'm an advisor, a mentor, and also a momager to an amazing young man who's a superstar, and trying to guide him in these financial freedom methods as well. And he is determined to ensure he doesn't start out life in debt. So, and then I have an older son who's actually a banker. So, you know, our whole family's kind of wrapped up in this whole mortgage finance thing. And I work in the private sector for private hedge funds and banks. And hopefully in the few months coming ahead, I will be the owner of yet another business. So I'm really, really excited. And I also love insurance, the insurance space. That's why I invited my girl Tracy up here, because guys, there are people who are going in debt over the insurance policies as well. So you know what? We're all here to learn from each other. So I'm really excited to be here. And happy Clubhouse birthday, Kurt.
Happy Clubhouse birthday, Kurt. 1 year. Got this birthday balloon sitting right up there. You know, you gotta talk about that this morning. All right, flash those mics. Go ahead, Kirk.
Actually, I think it's Rosalore's turn.
Okay.
Unless my order is wrong, but go ahead.
Yeah, I mean, go for a Credit Goddess.
Happy
Queen.
anniversary. Hey, Tiffany. Hey, everyone. My name is Rosalora Lewis. I'm also known as Credit Goddess, or all things credit, where money talks, but credit holds a conversation. I'm a credit score improvement strategist. I help my client improve their credit so they can gain access to capital. Business credit consultant and expert, and also NAV Inc. business loan broker and consultant as well. So if any one of you have any credit questions, feel free to come up, because this is how you gain access to capital. And then you go to Don to then save on interest costs. So I'm so glad to be here as usual with my family. But I'll stay tuned and learn as I can, because Don, I'm always learning something new every day. But if you guys want to reach me, you can reach me at creditgoddess10k.com, or you can follow me on Instagram and Facebook at Your Credit Goddess, or you can visit my website at yourcreditgoddess.com. Thank you for having me. Bye.
Listen, can I interrupt here for just a second? Jed, I don't mean to interrupt the flow here because it's going really well. But I just want everybody in the room right now. We have 53 people in this room right now. Folks, this stage is going to be filled up. Right now, we have a well-curated stage. We have a powerhouse of information here. I get to listen to some of these people when they're not in this room. I get to go and just sit in the audience and listen to them. I listen to Kirk. I listen to Credit Goddess. I get to listen to Kenyatta. Giuseppe is going to be coming up here. Listen, folks, this information right here now, and the reason why I'm saying this, the reason why I'm so passionate this morning is because I go to other rooms for a hot second. I go in there to see what they're talking about. And listen, I hear people who talk for 15 minutes, 20 minutes at a time, maybe even a half hour. They have 60, 70, 80,000 followers, and they're not saying a doggone thing. Not a doggone thing. And if I use other language, I would say it a different way. You're not going to
do it, Don. Don't do it. Come back. No, come back to life.
You're going to that's not going to happen here. You're going to get information you can use, life-changing information. And I just wanted to say that before you click in here and think you might want to leave and go into one of those other rooms where you're not going to get that good information that's going to be life-changing. So start pinging some people in here as we finish up these introductions. Come on, folks. Listen, this is going to be some great stuff today. Go ahead. Continue.
Yes. Yeah, I believe it's my time to just kind of tell you guys my name. My name is Kirk Nugent. I also go by the Geek Speaker Preacher. I am a live video coach, live video strategist, and a lot of people ask me, what is live video strategy? Here's a quick one, right? I believe you should do three things. If you're going to do anything live video or content creator related, you got to do three things. And one of them is to be able to answer a question, right? You answer a question, you're going to have people that come back to your content, right? That's what Don is doing here today. He's answering a question. Some of you tapped into the room because you saw the question, how to pay off a mortgage in 7 years. And Don is going to deliver on that verbal contract. When you title your video, you title your room, you title your content, you're making a verbal contract with your viewers, with your audience, and you want to make sure you deliver on that. So you want to answer a question. The second thing is you've got to be consistent. You can't keep on shifting. You can't keep on moving. You can't keep on running from one topic to the next, to the next, to the next. Stay in your lane. You're going to see that from all of your moderators today. Everybody's going to stay in their lane. In fact, Credit Goddess, I've already sent somebody to you. Somebody asked us a question online about how they can repair their credit. I responded to them saying, you want to check out Credit Goddess. Her 10K card is there. You're going to see people staying in their lane. They're staying consistent to their message, to their thing. That's the second thing. The third thing, and I'm done, you want to be vulnerable. You heard Don say it at the beginning. I have Asperger's. Some people were wondering, why would he even start with that? Well, that makes him real. That makes him his lived experience, his own experience. His lived experience is his own currency. His lived experience, no one can take that from him. That means if somebody else has the answer to this question, they can't answer it the way Don answers it. Those are my three things. You want to answer a question, you want to be consistent, you've got to be vulnerable. If you do those three things, you will succeed with live video, you will succeed with content creation, you will build an audience, you will funnel clients to your business, you will establish yourself as a thought leader. My name is Kirk Nugent. I also go by the Geek Speaker Preacher. You can find me at kirk10klive.com.
How about
right.
that?
And
Again,
Don scared me so bad. I started texting on my phone. I got two people up here, Tracy and Miss Amore. Oh my God, I'm scared, Don. From the YCEO Network collaboration.
that's what I'm talking about. Get those people in here. Have mercy.
All right, all right. We're going to get into content really, really soon. So as soon as we get done with these moderator introductions, Don is going to get into an example. So yeah, I'm super excited. Giuseppe, thank you so much for coming to the stage. Please let everybody know who you are and what you do and how they can get in contact with you. And just so you know, we're streaming this on YouTube, Facebook, Twitter, and LinkedIn. So this
And
is gonna,
wisdom.
and Wisdom and a bunch of others. We can't name them all, but anyways, Giuseppe, go for it.
Thank you, Jared, to bring me up. I'm happy to be here. I'm Italian. I'm a real estate investor since 1991. I'm investor in stock and cryptocurrency too, motivational speaker and author. Real estate is my life, and I'm exactly right person that remember everybody that you are freedom, you are financial freedom, not when you have money, but when you have knowledge. Knowledge, take action is an incredible power. Because I had in Italy an incredible number of property, 1,000 employees, 24 real estate agencies, the whole city of Italy, but I was not happy. Everybody think that Italy is the best, but trust me, this is the land of the dream. 5 years ago, I decided to start to live my dream, my American dream, but restaurant was not my job, lost all my money, finished to sleep in the car. Today, hard work, knowledge, equal power. 187 employees, 507 property in Cleveland, Ohio. I've been flipper over 1,000 property in Florida, and the best yet become because I start to speak English, not very well yet, but only 1 year ago. That is me. That is Giuseppe. Check my Instagram, my channel, YouTube, my website. I love integrity before everything. For this, check my Instagram. You can see that what they say, what they do is the same thing. This is me. This is Giuseppe. I am living my American dream. Thank you, everybody, to give me the opportunity to live in your country. Now it's my country too, and I'm complete for now.
How about that? Excellent, Giuseppe.
All right, we got 3 more moderators, and then we're going to put up an example on the screen. Tracy, please let everybody know a little bit about yourself.
Good morning. Good morning. Sorry about that. I was talking to the mute button. Good morning, everyone. It's so good to be here. This is such valuable information. I am Tracy Oriomi. I'm a financial educator here in Atlanta, Georgia, and I help to educate women about money and how money works, specifically divorced and widowed women. I help them to secure their financial future using life insurance strategies. Because 75% of women have to get some type of social benefit after a divorce. And 1 out of 4 women are broke within 2 months of a divorce. And 7 out of 10 women will be widowed at an average age of 59. So my mission and my crusade is to help women to level up their finances, help them to get out of debt. I love what Don is doing with his strategies of helping people to pay off their mortgage, which is absolutely incredible, because you cannot build generational wealth if you're saddled with debt. And I'm finding that so many people are in debt and they're struggling with it, and it's a huge burden. 1 out of 3 Americans are losing sleep at night over their debt. And so many people, are having family relationship problems because of debt. So my mission and my crusade is to help specifically divorced and widowed women to get out of debt so that they can build generational wealth using life insurance strategies, because knowledge is power. Thank you so much. Back to you, Jared.
All right. Thank you so much for joining, Tracy. I appreciate you. Valerie, you're up next.
Good morning. Good morning. Sorry I'm late. Got a lot going on. Got 7 buyers or a mixture of sellers trying to get to the closing table this month. So it's super busy. But anyway, my name is Valerie Sears Jones. I'm a licensed real estate agent here in the state of Texas, specifically Dallas, DFW market. I love helping buyers fire their landlord to become the lord of their own land. We work with sellers and investors to help them liquidate assets and acquire many others. And I'm just here to support the room because the mission is strong. The power of the dollar is even stronger. So let's get it on this great Friday.
All right. And last but not least, we have Roberta. And Roberta, if you're speaking, there you go.
Yes, it's Roberta Moore. I'm the president and CEO of Amore Incorporated, and we provide healthcare staffing for the federal government. We've been in business since 2002. We're an 8A graduate through the SBA program. Currently, we're HubZone certified and Woman-Owned certified through SBA. We're also a minority business enterprise in Maryland. So we're here in the Washington metropolitan area, DC, Maryland, and Virginia. And you can contact me or reach me at Amora, AMOORER, 10K.com. And that has all of my contact information, our website, all of the social media, and LinkedIn contact information. Thank you so much for this opportunity. Thank you for bringing me up and allowing me to be a part of this program. So I'm Ms. Moore, and I'm done speaking.
All right. So here's the moment you all have been waiting for. Dawn is about to drop these gems on top of your head today. So again, click that plus sign, invite people into the room on Clubhouse, and click that share option on the other streaming platforms that you might be on. And Dawn, so we have a question about getting equity out of your home, but so just know whoever asked that question, we're definitely going to get to you. But I would love to kick things off with an example of what you've done for your clients to help them understand interest costs and how you help them save on that interest cost. So what's the first example you'd like to get into? And by the way, if you'd like to come on stage on Clubhouse to ask a question, please raise your hand. We love interaction. We want to be able to help you. And just know that Dawn's time is not free, but on this stage, it is. So closed mouths don't get fed. I would highly advise you take advantage of asking about your refinance, your mortgage, your student loan situation, your car loan situation, because the people that come on the stage to ask questions will get blessed, but not only will you get blessed, you're blessing others with the answers that they're able to see as well. With that being said, Don, we have no questions on stage yet. So what example would you like to jump into?
Listen, Tracy, this is why I love this platform of doing this type of thing, because you get ideas. You start out trying to do something else, but then you get another idea. I mean, doing it live like this and getting excited about the new information that you can bring about. And Tracy, it's all because of you this morning. I had to shift gears because you talked about divorced women. We're talking about life insurance strategies. And I want to talk about both of those things starting out right now this morning. And Tracy, thank you for being who you are. Right now on our screen, we have a client example of a lady who came to us who was recommended because she was newly divorced and her ex-husband handled all of the finances. Tracy, how many times do you see that?
Oh my God, I see that in the majority of cases, because most women turn everything over to their husbands and they have no idea what's going on.
Okay, so listen, folks, this is what we're talking about. We're talking about being thrust into a situation where we have, we call it, when you're in a family, everybody has their own thing. All right. So they have this strategy. They have their way of doing things. They have this memory of what they're doing. And so what happens is it's like losing half your brain when there is a loss in the family. It could be through death, it could be through a divorce, but whatever is going on, that was your link to whatever it is that they had that expertise in. So it was yours through family, and now it is not yours because now it's lost. So here's what we're talking about. So they came to me and said, Don, this lady is afraid she will not be able to provide for her two children a home that they can be proud of and live in. She didn't want to be in an apartment. She didn't want to go from her house to an apartment because of losing a husband through divorce. So when they came to me, she said, well, let's take a look at her situation. And we plugged it into our system. And this is what we came up with. So if you want to see what we're talking about, do what Jared said. Go to your tablet, go to your computer and type in ICE10KLive.com and choose which platform you want to see this example on. Because not only we're going to talk about how this lady was able to purchase her home, we're going to talk about how what we're doing and tie it into building wealth through insurance. Oh my goodness, you want to be here
I
for
love
this.
this, Don. I love
You
this.
know we love this. You know we love this. Okay, so here's what we're talking about, folks. All right, so here's the example. This lady was getting ready to, and I showed her how she was able to get a home on what she was making alone. And I'm telling you, she was almost in tears when I showed her this. So she was able to get a mortgage. All right. She was able to get a mortgage for $156,000. And that was before everything started blowing up. That house is worth $300,000 now. Okay. That house that was $156,000 then is worth $300,000 now. So she's even more happy. I haven't talked to her lately, but I'm sure if she saw me, she would give me a big old hug and say, listen, I didn't think I was going to be able to do it, but here's what happened. So what we showed her is in 5 years, this is what amortization does to this loan. $156,000 at 4% interest. In 5 years, she would have paid this loan down by $14,949.52. Okay. By making her payments on time every single month, she would have paid it down by $14,949. But the interest cost on this loan at this point in just 5 years is $29,879.48. Folks, this lady would have been working so hard to provide for her family. I just need to know from anyone on the stage, in the audience, how fair is it that she works hard to pay this loan down by $14,900, but the bank gets to charge her $29,879.48 for the privilege of paying them back? That
sounds like a payday loan to me.
Criminal.
That is not right. And this is what's been going on for the last 87 years. Since 1934, this system has been in place. And do you know what else is going on since 1934? How the banks are doing this is not taught at any level of financial education. It's not taught. Your realtor doesn't know it. Your financial planner doesn't know it. Your CPA does not know it because it's not taught in their classes how loans actually work. How in the world can a loan officer, how is it that this is left out of their education, how amortization actually works, how mortgages work, how loans work? A person who sells loans for a living, how in the world can this be left out of their education? I'm not a conspiracy theorist at all, but I'm at a loss for words and trying to understand how this could be left out of our education, the most ubiquitous financial tool on the planet, the interest-bearing loan. All of us use it in one form or another, and none of us have been educated on how it works. Come on, folks. So here we got $29,000 in interest. So in the first 5 years, this lady would have paid out $44,829, and only $14,000, less than $15,000, she would have added to her equity. She would have paid the loan down by less than $15,000, but she would have paid out $44,008. How fair is that? So here's the reason why, folks. Her 4% mortgage really means that the bank wants 71% of what she borrowed in the form of interest. Let me tell you this way. If her loan was just $100,000 for 30 years at 4%, here's how much interest the bank would want on a $100,000 mortgage. They would want $71,870 in interest on a $100,000 loan. One more time, on a $100,000 loan at 4%, the bank would want $71,870 in interest on a $100,000 loan. Folks, how in the world is that 4%? How in the world is that 4%? How do they do that? Well, listen, maybe on another broadcast, we can get into the nitty gritty as how they actually do that. But listen, we're going to be talking about what she was able to do instead. So how much interest did the bank want on her mortgage of $156,500? Do you see this over here on the left side of the screen? $112,477.46 interest over 30 years on this loan. And remember what I said at the top of the broadcast? 9 out of 10 people that you know. And the reason why I say that is because people think I'm just pulling these numbers out of my head. I almost said something else, CEO. Okay. All right. So listen.
Now, what was that drink you said y'all were making? You know what? I'm gonna have to come down there and check on y'all.
Listen, I had some Kurt Sorrow.
That's it.
Listen, folks, here's what we're talking about. All right. What we want you to see is that this thing is not right. All right. We need to understand it. And guess what? Once we learn how to read an amortization schedule, we're going to get into that. But do you realize that if you learn how to read this thing right, you can save money at the same rate that the bank is charging you? What? If they're charging 75% more interest than you need to pay, by understanding how an amortization schedule works, you can cut your interest cost by 75% using your current budget. You don't need more money to get out of debt, folks. All we need is to learn how to pay less interest by learning the rules to the game. And if you want to know the rules to the game, better start pinging people in here right now, because or invite them to the broadcast. And if you're if you're streaming live right now, folks, start sharing this information with all of your friends. They are going to want to see this, and they're going to thank you. You know, we have many people that call us up. This just yesterday, a family called up and wanted this information because somebody else had watched this video. They were so they were so amazed at what was going on. They had to know for themselves. So here's what we're talking about, folks: $112,477.46 to pay, and this is why it takes 30 years. All right, because the bank wants the $156 plus the $112,000. So the total cost of this home is $268,000, almost $269,000 when you add the interest plus the principal. That is what's called the true cost of purchasing something. The principal plus the interest. And we're taught to ignore interest cost. not the interest rate. We focus on interest rate. We love getting a good interest rate, but we're not paying attention to the interest cost. Here's the interest cost, $112,000. So when we get through with this, with our opportunity cost calculator, plugging in all of her numbers, and the opportunity cost calculator works like a financial GPS, saying move this much money in this month on this day of the month and apply it to the loan in this way. We will calculate your interest savings because we have mastered how to read an amortization schedule and put together a computer program that beats the bank at their own game. All right. But we just don't want you to give you a black box and not understand it. Our program teaches you how to understand amortization at the granular level so that you can understand what's going on, so that you can teach it to your family members, so you can teach it to your children how this all works. Okay, we're not just giving you a computer and saying believe it. We're going to explain it to you how it works, and your financial education is a lifetime of learning. So here's what's going on with this one. All right. So by the time we're done with this, instead of paying $112,000 in interest, she's only going to pay $28,050.40 and be done with her mortgage in 6.7 years, not 30 years, 6.7, saving her $89,827.06 in interest she does not have to pay. And we're doing that with her current budget. She's not working an extra job to do this. She's working the one job. She's a mom. She's got 2 kids. She can't be working all the time and take all that time away from her family. She's using her current budget on what she's making now and able to do this because we're teaching her how to read an amortization schedule. That $89,000 that she's saving, if the bank received that, guess what would happen? The bank would invest that money. But if she doesn't have to pay it, what could she do? She can invest that money. Now, I'm going to tell you something, folks. With our company, we don't just tell people how to get out of debt. We show them how to take that interest savings, pay attention to it, and turn it into generational wealth. One strategy, and Tracy talked about it, one strategy is how to take permanent life insurance and as a hedge against inflation, as a strategy for building wealth. Here's what you can do. And I need Tracy to kind of help me out here because we employ licensed insurance agents. I am not a licensed insurance agent. So I have to be very careful about what I talk about and what I say on this subject. But we employ licensed insurance agents in our company who will then help our clients use this strategy to build wealth. So here's what we're talking about. What if there was a way for you to take some of those interest savings, all right, and then plug it into a permanent life insurance product and then grow that money? It grows tax-free. What? So if there's a way to grow your money on an average of 3 to 6%, sometimes even 7%, grow your money at that rate, tax-free. And then when you're ready to take it out, you can take that money out that is earned and spend it tax-free. What? What are you talking about, Don? Yes, you can grow your money tax-free and then take it out tax-free. Now, here's what else is going on with this with this thing. All right. What happens when the stock market goes down and you've got your money in stocks or in annuities or whatever? When the stock market goes down, your earnings go down. With this particular products, when the stock market goes down, your money doesn't go anywhere. You can't lose with the stuff we use. It doesn't go down. You can't lose your principal. You can't lose the interest that you've earned. You don't lose it. It just continues. It either grows, stays the same, or it grows. Those are your only choices. The money just grows. All right. And you don't have to recover from losses. This is what's great. Oh, and just one other thing. There's many things that go along with this thing, but I just want to give you one other thing. Okay. No, maybe two other things. All right. And then we're going to have Miss Tracy say if I'm telling you the right thing about all of this, that once she gets her cash value built up to a certain point, she can actually borrow money from the policy. Let's just say she has a $40,000 built up in this policy as cash value, and she wanted to buy a $40,000 car. She would go down to her credit union or whatever and set up a loan and figure out how much interest they want to charge her to buy that car. Or she could borrow the money from her own bank, purchase the car, and then the interest she would have paid another banking institution, she could pay to herself. Now, here's what's great about this. The $40,000 that's in her policy is making interest. So when she borrows $40,000, she's not borrowing out her own money. She's borrowing the company's money. Her money stays in the policy, continuing to make money, make interest and dividends. And then on top of that, as she pays what she would have paid her credit union, she's paying back the policy to herself, and the interest that she would have paid another company, she's paying to herself. And now the insurance company has to pay her interest on her interest. You know what else she's doing? She's got little policies on her children. And you know what that does? That it makes that ensures their insurability. So no matter what happens in life, no matter what happens, they whether they get whatever diagnosis they receive, whether it's diabetes or whatever, they cannot ever, her children can never be denied insurance because of what she has done here with permanent life insurance. Listen, folks, there's nothing else like it on the planet. Miss Tracy, how did I do so far not being a licensed insurance agent?
Oh, wow. You did absolutely incredible. And you are so right. You can borrow money from the policy. You know, it's creditor protected, which means you can't be sued with your life insurance policy. They can't take that from you. You know, you don't have to wait until you're 59 and a half to take money out, you know, because in a lot of other instances, you know, with other financial products, you know, they penalize you if you take the money out prior to age 59 and a half. With your life insurance policy, you're not penalized. So, so many reasons to have life insurance. I mean, it's a game changer. Yeah, you sure you don't have a license, Don?
Listen, my folks teach me very well. Listen, folks, here's what I'm trying to tell you right now. Because I'm able to learn this, not being a life insurance agent, what could you learn from your life insurance agent so that you can maximize the earnings on your money and put yourself in a much better place financially? Folks, do you know that we have people who are creating family banks? They become their own bank. Come on. What could be better than that? Get your house, pay it off on all of your debt, including your student loans, pay it off in 7 to 9 years, not having to refinance, not having to do any of that stuff, and then take this savings and then grow generational wealth. And I'm talking about not just a few $1,000, not just a few $100,000. This lady, by the time she's done, by the time she's working, she will have a net worth of over $1 million. This is what we're talking about. This can be done, and she can live a great lifestyle while she's doing it. You don't have to eat beans and rice like some people say. You don't have to drive a 30-year-old car. You don't have to stay home and not create memories with your children. You can live well and do these types of things. So the very things that we've been told, that the financial gurus are telling us, refinance when you can save 2 points on your mortgage. Listen, folks, if you're saving money by refinancing, who would have to be losing money? All right. And so, listen, there are certain things you never want to do. Never put a large down payment on a mortgage ever. So if you're getting ready to get a mortgage and you're thinking about putting a large down payment on it because it's going to save you money, don't do it. Okay. Let me tell you another thing. 15-year mortgages versus 30-year mortgages. Never, ever, 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 ever get a 15-year mortgage. Don't do it. Get a 30 and pay it off in 6 or 7 years. Always get a 30. Never get anything less than a 30. In fact, they even got 30-year, 40-year mortgages. And if your company will give you a 40-year, take that and pay it off in 7. I'm going to show you how that benefits you more. All right. Here's one thing. A client called me yesterday. They have over $1 million mortgage. They have $1 million, and their mortgage was just sold to someone else. All right. So the new company has them at the higher interest rate. The new company says, "Oh, now that we have your mortgage, do you know we can get you down to 2.2 or 2.3? Keep you at 29 years instead of 30 years because you've already been in this mortgage for 1 year. So we're going to give you a brand new mortgage for 29 years, and we're going to lower your interest rate." And he called me and he was all excited. And then I just pointed out a couple of things. I said, "You mean this new company that has your mortgage has you at a higher interest rate? And they called you to lower your interest rate, which means it saves you money, correct? That means they would be what? Losing money. They purchased this mortgage from another company and then going to call him up and offer him a lower interest rate so that he can save money in order for them to lose money." Folks, does that sound like sound financial business practices to you? To borrow, to pay for and purchase a financial instrument, and then take that and say, "Listen, oh yeah, all the money we were supposed to make on that, now we're going to make less because now we want to offer you a lower interest rate." Come on, folks. All we have to do is start asking very good questions when these offers come. And so so he said, "Don, what do we do?" I said, "I don't know. Let's plug in the numbers into the system and let's see what's best for you." So the bottom line on all of these questions, whatever financial road you end up on, whichever one you choose, you only want to know one thing. How much is it going to cost me overall to apply this particular strategy? How much is it going to cost? Not what my payments are going to be, not what my interest rate is going to be, but how much is it going to cost me overall to employ this strategy? And I told him, people lie, but the numbers won't lie. He couldn't wait to get with us and plug in the numbers to see if the refinance was going to help him or to stay right where he is and to pay off his $1 million mortgage in the 9 years we told him he could pay it off in. All right. Listen, he said, "Well, Don, one of the things that they told us is that we're going to save $95,000 over what we're doing now." And I said, "Remember, that's $95,000 over 29 years. Remember, you're not going to be in your mortgage 29 years. So that $95,000 to you doesn't apply. That's $95,000 savings over 29 years. You're only going to be in your mortgage for 9. So those numbers don't apply." He says, "Oh, I didn't think about that." So folks, there's so much going on with these things that we don't know. We don't have the rules to the game. And once you know the rules, I guarantee you, you will save the maximum amount of interest that's mathematically possible for you. Listen, do we have some questions by now? Because listen, I need to take a drink of water. I'm just getting so excited. I'm getting dried out over here.
Don, this is coffee. Drink your water. But I have a question for you, honey, because I'm like, I got some water right here too, some high alkaline water. Oh, Lord. Oh, Jesus.
Hey,
Don, you
Coffee,
got my...
actually, before you jump in, I would love to just quickly reset the room.
Yes, sir. Yes, sir. I'm going on mute. He got me all stirred up. My Lord.
It's all good. Yeah, drink that water, brother. And I have a question for you as well.
Okay.
Oh my.
But hey, everybody, thank you so much for joining this room. This is the P.I.L.L method, how to pay off mortgages in 7 years. If you've never been in this room, you are about to experience a blessing for your 2022. So make sure you click that greenhouse at the top and follow the club. Also, I'd love for you to go ahead and click on Don's profile as he's getting hydrated and give this man a follow. He works extremely hard. We do this room Monday, Wednesday, Friday at 8 a.m. Eastern time, and we do this room at Sunday at 9:30 a.m. Eastern time as well. So if you want to catch him on this stage or any other stage he pops on to really blow your mind with this P.I.L.L method that is saving people hundreds of thousands of dollars in interest costs, you want to make sure you follow him. But not only that, but click that bell next to the follow button and choose the always on option. I would also love for you to check out these moderators on stage that are supporting Don and amplifying his voice to get this information to the masses. So definitely make sure you click on Kenyatta, YCEO, the Credit Goddess, Kurt, Giuseppe, Tracy, Valley, Roberta Moore, Coffee Brown, Dr. Femi Evans, Vernita, and Bruce. They all do amazing content on Clubhouse, and you're always curated by who you follow. So if you want to see more empowerment, more financial literacy information, definitely want to make sure you're following all these moderators. And if you're new to the room and you'd like to see the visuals of what Don is going to be putting up in this next hour, you can go to your laptop or your iPad and you can go to ice10klive.com. And you can choose to stream this on YouTube, Facebook, LinkedIn, or Twitter. And definitely would love for you to follow him on all those platforms as well, as Don drops a lot of gems for the people that join him in those communities. So Don, my question for you is this.
Yes.
If people in the audience want to figure out what day, what year, month, and day they can be debt-free, how would they be able to get in touch with you? And what would that look like?
Okay, what they could do is go to ice10k.com.
And Don, if you're speaking, you're on mute on Clubhouse.
All right, listen, what they could do is go to ice10k.com, ice10k.com, and then find a button that says get a savings and earnings report. And then once they click the button, all they have to do is follow all the instructions there, because what we're trying to do is keep out all the robots out of the system. All right. And then we have to verify their cell phone number, and we'll send them a code. Once they get that code in their message, put the code in and it will let you into the form. Fill out your information, and one of our staff members will take that information and then prepare for you a savings and earnings report and set up a consultation for you. All right. Then you can know the month, day, and year you could be debt free and how much interest you can save. We're going to show you then what your potential earnings could be with all the money you are no longer paying the bank. And do you know we have average families that are somewhere with those earnings, somewhere between $800,000 and $1.5 million every time we do one of these things? Oh my gosh, with the money that the bank was supposed to get, they can turn that into somewhere between $800,000 and $1.5 million. We're taking average families that are working a 9 to 5 and making them millionaires with the money they were supposed to pay the bank. I can't stand it. Oh my goodness.
That's so good.
Listen,
So good.
what else you need, Jared?
No, that's good for now. I'm definitely going to ask you about the book and after the next example. But if that doesn't inspire you to share this with folks going into 2022, I don't know what will. So make sure you're clicking that plus sign on Clubhouse, inviting people in, and then clicking that share option on Facebook, Twitter, YouTube, or LinkedIn, and inviting some people in. Sharing is caring, and this is some life-changing information. Kirk, are there any questions on the streaming platforms that we can address?
Hey, Jared, it's Coffee. I still wanted to ask my question if it was okay.
Okay, go for it, Coffee.
Yeah,
Hey,
go
Don,
ahead,
quick
Coffee.
question for you. So there are a number of authorities in the quote unquote financial space
Yes.
who actually teach the 80-20 rule as it pertains to mortgages. Put 80% and then, the no document type concept where you just have a 20% mortgage. When you said what you said earlier about not doing that, how do you address that in the financial space where this is something where they're promoting, where they're saying, hey, do the 80-20, that way you don't have such high taxes, so on and so forth, and just hold that mortgage with that 20%. But you're saying do not do that, don't do that at all. How do you actually combat or challenge that concept of thinking?
Oh, coffee. You're going to get us all in trouble this morning.
I don't care, Don. I don't care at all.
I've talked to her. She doesn't. She doesn't care.
Because I'm serious. It's so, we already know certain quote unquote thought leaders in the financial space. They've been promoting this for years. And when I was a mortgage loan processor, this was something that we were advocates of. And now hearing you, this is the opposite concept of thinking. It's like you got to go through a whole different paradigm shift in order to even be able to accept the new information that you're presenting. So how do you address that?
Well, listen, we're going to show you some things here on the screen. I'm just doing some calculations here. Hold on for just a second while I do this one calculation, and boom,
No problem.
there we go.
Let me just
all right.
Go ahead,
I'm
Don.
ready. I'm ready.
Oh, okay.
I'm ready.
All right, cool.
All right.
Show us the way, Don. Show us the way.
Okay. So listen, we have now I had a situation not too long ago. All right. Now I'm putting this on the screen right now. And Copy, are you able to see on our live stream?
Actually, no.
Well, then that's okay. I will explain it to you. Maybe I can paint this word picture for you. So here's a guy who comes in. He is an engineer here in Huntsville, Alabama, and he was getting ready to purchase this $400,000 home. All right, and he needed to put down. He was going to be able to put down, the standard 3%. But if he put down the 20% that you're talking about, he could avoid PMI. You know what we're talking? You know what I mean? So he could put down $80,000 and avoid. So it's a $400,000 mortgage. But you know what? He had significant resources. He was going to put down $100,000 over and above what he needed to put down. He was going to put down his regular money that he needed to get into the loan, and then an additional $100,000. So he would have a $300,000 mortgage, okay, for 30 years. So what we're going to do here is put these things side by side, and we're going to put in a $400,000 mortgage for 30 years. And then we're also going to put in a $400,000 mortgage. All right. And let me blow this thing up so everybody can see. Boom. All right. So we've got a $300,000 mortgage. All right. At 3%. And we have a $400,000 mortgage at 3%. Now, on the face of this, folks would say, listen, Don, why not put the $100,000 down? Because if we take a look at this, the total interest cost on the $400,000 loan, Coffee, is $207,000. $207,000. By putting the $100,000 down, the total interest cost on this loan is $155,000. So we're talking about 50, a little over $50,000 savings by putting the $100,000 down. So already it sounds like the engineer has it all figured out. And now he's also going to be able to avoid PMI. So is that kind of what we're talking about? Is that kind of the scenario we're talking about, Coffee?
Yes, sir.
Okay.
Exactly.
But you know what advice I gave him? I told him get the $400,000 mortgage for 30 years, not the $300,000. And here's why. Okay, so for those of you that are seeing this, all right, so his $300,000 payment on that $300,000 mortgage for 30 years is $1,264.81. $1,002, and the $400,000 mortgage is $1,686. I said, "Can you afford the payment?" He says, "Yeah, I can afford the payment, but that's not why I wanted to put the $100,000 down, is to get the lower payment. I wanted to save the $50,000 in interest on this loan, plus I want to avoid PMI." I said, "Well, if you got the $400,000 loan, where's your $100,000? He says, "My $100,000 is still in the bank." I said, "Okay, what if," now you can't see this, Coffee, but I said, "What if when you made your first payment on this loan, now you gave the bank your $100,000 and applied it to principal?" And I'm scrolling down here, Coffee, to $100,000 in cumulative principal. Do you realize it knocks off 125 payments? Okay, that's over 10 years knocked off of this mortgage right now. And when he puts the $100,000 as a prepayment, Coffee, doesn't he actually have a $300,000 mortgage at this point?
Yes, sir.
Okay, but now he doesn't have a $300,000 mortgage for 30 years. He has a $300,000 mortgage for a little over 19 years using the same money. But there is one problem, Coffee. He is going to have to pay PMI for 1 month.
You know what? No, I'm done.
Oh my God.
And Coffee, remember I told you he was going to do this and save over $50,000 by putting this $100,000 down this way. He saves over, who can see this example? Somebody else say it. How much interest is he saving?
I'm looking.
How much is he saving, Kirk?
$110,226.84.
Not 50,000 over 30 years. He's saving $110,000 and he'll never have to pay, and he's saving it in 1 month. Coffee, what do you say?
Just pray my strength. in the
Coffee's
Lord.
about to
That's all.
leave her job and come work for you.
Listen, I'm just pray my strength in the Lord. That's all I can say. Oh, goodness.
So here's what we're talking
Don,
about. Yeah, go ahead.
Did they, so with the 100 that they save from interest and the 100 that they put on the loan, it's almost like they put 200 on there.
Come on. Isn't it
And
something?
then, as a licensed insurance agent, Don, I would strongly recommend that they dump that into a whole life product and just let it keep creating more money. But I'm going on mute.
Ooh-wee.
My God.
Listen, stop giving it to the bank and dump it into your whole life product and turn it into another $1 million. Come on, folks. You know, this is what I love about this. This is what I love about this, understanding how all of this works. Copy, do you know how many people I run into that have 50, and I know you see it, 50, 70, $100,000 in the bank? I've met people who have $500,000 sitting in a savings account. Do you know?
Never smart, Don. Never smart.
Listen, do you know what we show them? That they can, especially if they're real estate investors, they can take that money, put it into a whole life product, okay? And do you know the next the next week they could take out a great chunk of that money and then start investing it and still earn on that money as if it was still in their program? Oh my goodness. Okay? That's
Wow.
what we're
Wow.
talking about.
Wow.
Listen,
Wow.
there's just so much that we could do, folks, if we would just learn. Ms. Coffee, I want to thank you for bringing that example to us this morning, because people are doing that kind of thing all the time because this is what they're taught. They're not looking at the big picture. And because you brought that question to the stage, now people are beginning to see a bigger picture on this thing. If the bank is offering it, if they accept it, I guarantee you they're making money on it.
That's right.
All right?
That's right.
Ms. Coffee, anything else?
You know what? I'm speechless. I'm going back on mute.
Okay, thank you so much.
Coffee, you're not alone. The comments online have kind of perked up as well. One person says this is mind blowing. Nunu says on YouTube, this is mind blowing. Yuli Moss says gratitude for this information. Yeah, somebody else was asking Coffee, what's the 80-20 rule? So they wanted to kind of get a little bit more on that one. But others are just kind of chiming in saying, man, every time I come here, I learn something more. Folks are saying good morning. Here's Time Mo on YouTube saying, Don, I learned something new every time I listen to you. I love how your brain works. Time for us to outsmart the banking system. We do have a couple of questions though. Myra on YouTube says, good morning. I love the idea of paying. Yes, sir.
Real quick, before we get into that question. So Kirk, I just want everybody to know that's listening on the streaming platforms, we are going to prioritize you and we're going to go to all of your questions. So keep those questions coming. We're going to go through them in order as they come in. But real quickly, Don, you were talking about the big picture, right?
Right.
And one thing that you have is this book that's a bestseller on Amazon that really breaks down the bigger picture. And I would just love for you to tell people a little bit about that book and how they can get a hold of it. And also, what is the value add that you're providing people with 10K cards?
Well, listen, folks, here's what we're doing with this book. There, out of 33 million titles on Amazon, 33 million, there's only one book that's talking about what we're talking about today. Only one. All right. How to read an amortization schedule, how to understand it, and how to defeat it. Can you imagine that? A guy from 5'4", from Battle Creek, Michigan, okay, from nowhere, Michigan, that somehow God has blessed with this kind of information because of my Asperger's brain. I wasn't able to do well in school, but I can do this. Come on. Where else can that happen? So when you get this book, you'll be able to understand some of this thing and start learning some of these concepts, and then you can share it with others. Not only that, but you can get a 10K card that goes along with it, a digital business card worth $100. So, Ms. Kenyatta, listen, will you please tell them how they can get their 10K digital card worth $100 once they purchase the book? And not only that, folks, but because it's Christmas, for every book you purchase, you can get a card for everybody in your family, or give it away as Christmas gifts. So we're going to give you a digital card worth $100 for every book you purchase. Miss Kenyatta, what's going on here?
So you did the best thing and you gave the best gift. You went ahead and bought the P.I.L.L method book. What you want to do is screenshot the receipt and go to ice10k.com, click the link that says I'm ready, and upload that screenshot of your receipt to I'm ready. Build out the cards with the S to your specification with all your social media outlets, your phone number, email address, etc. And then let us know where you want to receive this card. And Sean will deliver it sometimes under an hour, you guys. unheard of, but under an hour, and you would get a 10K card value at $100.
Listen, we have the CEO of 10K
Okay.
card
Okay.
in the house. Miss YCO Tiffany, do you have something queued up for us?
I do, but let us clarify. I am a partner of there, and Sean 10K is the CEO. And he's right here. He's right here, the man with the plan. So right now we're going to go to that wonderful commercial that you asked for.
Is being sponsored by 10K Cards. It's the authorized digital business card on and off Clubhouse. Get all of your combined links in one place. Your website, all of your social media handles, plus multiple ways for clients to pay, like Cash App, Venmo, Zelle, and payment. Yeah, you heard us. Payment. P-E-Y-M-Y-N-T. We've formed partnerships with the best brands on the app, like the P.I.L.L Method, Payment, and Bam.eco to help Clubhouse users earn more money while they're on and off the app. What are you waiting for? Click on my link today and get started with your own 10K card. Time to level up and unlock your unlimited power with business strategist, massive action taker Sean Lashley, founder and CEO of 10K Cards. Let's get it.
Come on, Sean, talk to us this morning. Why is this card so important? Sean, we can't hear you. You're muffled.
Yeah, can you hear me now?
Yes, sir.
Yeah, the moment Kurt came on and Kurt have that high value production, it kind of made me wonder what the heck just happened with the YCO production. YCO, is everything okay? Normally I get that blast coming out of the commercial. I was like, wait a minute, what just happened there? Hello guys, good morning. How are you? This is Sean Lashley, founder and CEO of 10K Cards. And one of the things that we're happy with is actually helping individuals to grow, not only financially, but socially. Give you the confidence that you need to get your business out there, acquire new customers, and help solve more problems in the universe. So when we saw what Dawn was doing with helping clients to pay less in mortgage and helping them to cancel out interest on their loans, we're like, we saw a good thing, obviously, and we wanted to be a part of it. So what we did, we partnered up with Dawn to ensure that everyone that purchased a copy of Dawn's book will get a 10K card from us. Because what the card does, it put everything together all in one place. Your website, your phone number, your email, social media, your calendar, any link that you have that you want to share with your clients, put it all together in one place, and then you can now share that with anyone, anywhere, at any time. Long gone the days of being at a networking event and you're running out of business cards. It's not going to happen. You always have a card that you can use 24/7. So when you get a copy of the book, guys, not only are you expanding your mind and your understanding of exactly what the P.I.L.L method will do for you and your family, but you're also positioning yourself to get into the marketplace and dominate your space. And that's what we're here to do, Don. We're currently in Miami right now, where my wife is actually taking the course, How to Become the Bank, because we're launching the 10K zip code next year. And here's what I'm here to say, Don. With what you're doing, combined with what we're doing, we're going to make a lot of families happy. Because growing and expanding is done much faster when you pay less in interest. Growing and expanding is done much faster when you increase income. So you're helping to pay less interest on, and we also help them to increase in their income. So everyone that have their promo card ready, if you want to upgrade your card, guys, just text me the word upgrade. I not told you we're going to upgrade and save you $100 on your upgrade, but you're going to start earning extra income that you can help to put towards the payments that Don is teaching you how to do. With that said, Don, back to you.
All right. Thank you. Listen, since you mentioned Miami, Sean, I'm going to be in Miami January 5 because the P.I.L.L method is a proud sponsor.
No. Let's try this, Don.
Okay.
There's a difference between being in Miami and taking over Miami. Don, you have taken over Miami. So what? So what Don has done, guys, is Don has reserved the breakout room. Don came, look at the sponsor sheet. He said, "For that sponsorship, I don't like that. This level, I don't like that. I want a breakout room. I want a breakout room where I can have clients come to the room. They can watch the demonstration, and we can do a few examples, including their illustration. Because what we're doing on Clubhouse is great. The simulcast is awesome, but doing it live in person is what he wanted. So Don had the entire event custom create a package for him where he can now serve the audience the way he's going to serve the audience, guys. It was a very big move on his part, but again, it's just another testament as to how much he cares about the people, how much he cares about basically helping people to free themselves of all this burden they have that's called interest. So I'm looking forward to that, Don. It's going to be January 5th to the 8th. And we passed by the hotel last night where it's going to be. Oh, man, it's going to be a lot of fun, John. It's going to be a lot of fun, Don. In fact, me and Jonathan today should be going and do some jet ski. While the girls are in class learning, we're going to be on the water, so we'll send you some videos.
Listen,
Back to you, Don.
no, Sean. Listen, since you're taking over, tell them how they can get tickets. Tell folks how they can get their tickets.
Oh, very good, guys. If you go on the link right now at the top, the P.I.L.L method, you're going to see a button that says the Clubhouse Mastermind Miami. I would urge you guys to click on that button, get a ticket, and here's what I want you guys to think about. Expensive is going another year not knowing what you don't know. That's expensive. Expensive is living another year being unaware of what you can learn at the mastermind. When you come in the mastermind and you get to actually meet the individuals that's helping with all these different systems, your life is going to improve. You're going to share the information with someone else that you're going to meet, and their life is going to improve. Be a catalyst of change, guys. Be that solution within your family, within your neighborhood, that you can look around and say, hey, because of me, this happened. Have the kids look up to you and be like, wait, who is Don? I heard this Don guy. I've never met him, but my family's not in a much better place because my parents did his program. Who is this Don guy? Become that individual that's going to have that kind of impact on families. And then is when you're going to start finding a meaningful life. So click on the link, let me see, ice10k.com or ice10klive.com. And you're going to see the button that says Miami Mastermind. Get a copy, get your ticket there. When you're getting a ticket, guys, choose 10K at checkout, promo code 10K. And you're going to get a NFT card for the event. We're creating a networking card for the event. Be sure to get yours there, guys. So I'm looking forward to seeing you guys here in Miami. It's a beautiful place. It's a great vacation spot. Most importantly, what you're going to get here is going to be completely different than what you've seen or heard on Clubhouse. Because there's stuff that's being discussed in person that's not being discussed on Clubhouse. You want to be a part of it. All right. With that said, Captain Don, back to you.
All right. Listen, folks.
We're test my volume.
All right. Listen, we're back. We're back. So we've got some other examples up. As soon as we get through some of these other questions, we've got other examples to put up if we have time. Let's go.
All right.
So we have 45 minutes left. So if you have questions, make sure that you try to get in now, as time will fly because we are learning so much. So with that being said, Kirk, please let us know what the questions are on the simulcast, and then we'll go ahead and jump down. Oh, actually, never mind. I thought she was a question. So yeah, let us know what the questions are on the simulcast.
All right. Okay. We've got Myra. Myra says, good morning. I love the idea of paying off my mortgage within 7 to 9 years. But how do we approach the tax credit once we pay off the mortgage that we would lose? Do you get that one, Don? That's now we've paid off the mortgage, but I had this tax credit when I had the mortgage. Now, how do I replace that? What do I do since I no longer have that tax credit?
That is a very good question, and we get that a lot, especially from tax accountants who do taxes, CPAs that do taxes. We get that a lot, and we get that from their clients who are asking us the same thing. And so here's my answer to that. So just imagine that you reach into your pockets or pocketbook and take out, you have $1 in one hand and 27 cents in the other. Here's what's going on. You have to pay $1 in interest to the bank so that the government will give you 27 cents of that dollar back. One more time. You pay $1 in interest to the bank so that the government will give you 27 cents back as a tax break for every dollar. So here's my question. Laws don't get made because they generally benefit all of the people. Laws get made because there are lobbyists who go to Congress to talk to people and say, let me try to influence you as to why we need to pass this particular law. And I'm trying to tell you here, folks, that it's banking that is promoting the tax credit. on mortgages. Why? Because you have to pay $1 in interest to the bank, and the government gives back the 27 cents. Oh, come on. So here's what we're talking about. Now, here's the great part about this. Every year you have that mortgage. Every year you have that mortgage and you qualify, you will get the tax break. So what we're saying is this: you just won't get it for 30 years. You're only going to get the tax break for about 7 to 9 years. But every year you qualify, you'll be able to get the tax break. But once the mortgage is paid off, you will lose the 27 cents per dollar. But guess what? You get to keep the dollar to invest any way you choose. And the earnings from that dollar is going to dwarf the 27 cents you lost from the tax credit. So it would be a different thing if we were getting $1 back off our taxes for every dollar we pay, but we're not. We're only getting a percentage. So let's keep that in mind. So and look at all of the numbers. So what we just heard, folks, was called a heuristic or a rule of thumb. And when we have a heuristic, which means this is what we're doing, we're talking about a tax break, it looms larger in our minds than it actually is. Okay? So what are we talking about? If we would do the math, for every dollar I pay, I get 27 cents back. It doesn't loom as large because now we're working with the real numbers. So what do I want to do? Do I want to keep a mortgage so I can continue to pay $1 and only get 27 cents back? No. Let's save that money in interest, invest that money in interest that we didn't have to pay, and now that dollar that we no longer have to pay in interest, let's invest that too. All right? That's the answer to that question. I hope it helps.
That's good. Thanks so much, Don. And in fact, that helped me as well. So I'm glad that question was asked. Here's a second question, and I'm not 100% sure. I'm always interested to see what Don's going to come up with these questions. But we want to encourage your questions. Thank you so much for our audience online. 25 of you watching right now: Facebook, YouTube, LinkedIn, Twitter. But we want to encourage your questions. Again, as Jared has shared, there's only 40 or we're even less than that now, 30 something minutes left in our show today. So here's the question from YouTube. Hi, Don, can you please explain how amortization is calculated and how the banks decide what portion goes to them and what portion goes to principal? What portion comes to them in their interest payment and then what portion goes to the principal of what was originally borrowed? Just trying to give that question a little more body. But yes, how do they calculate that, and how is amortization calculated? That's the question from. Okay.
So listen, folks.
Guest on YouTube.
All right. So if you are listening on any audio platform, you definitely want to get on the streaming platform. And everybody who is watching the video, you want to start pinging people in and sharing this video with other people right now, because this is one of the few places where you're going to get the truth about how banks can take a 3% mortgage and turn it into 51%. So we've got a $400,000 mortgage here at 3%. And I want to show you something interesting.
Don, before you jump into it,
yes,
if you're in the Clubhouse room and you would like to see this example live on your screen, so you can see Don's pearly whites as he breaks it down with the charts and the calculators, etc., go to your laptop or your iPad and type in ice10klive.com. That's ice10klive.com. And you can either choose YouTube, Facebook, Twitter, or LinkedIn to see this example on the live stream. Back to you, Don.
All right, folks. Are you ready? Listen, this is so very interesting. So let's go over this part first. Okay. When you have a 3% mortgage, any 3% mortgage for 30 years is not a 3% mortgage, because by the time you're done, Here's what they want on a $400,000 mortgage. The bank wants you to pay back $207,000 in interest. Okay, how is that 3%? Is $207,000 3% of $400,000, Kurt?
Sorry, no, not at all.
Not at all.
No, in no world.
In no world. It's actually 51.778%. So let me change the number. Let me change the number. So let's do $100,000. Okay, $100,000 mortgage at 3%. All right, and we calculate that. All right. Uh-oh, I hit the button twice. Sorry.
There we go.
All right. So now I did it wrong. Boop, 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 boop. Got to get rid of this and got to get rid of this. All right. And now we calculate. There we are. It's loading up now. Okay. There we are. So now we are at a $100,000 loan at 3%. Well, look here. It's $51,776. It's still 51%.
Yeah.
Okay. So all 3% mortgages, no matter how much it is. Okay. All right. We're going to do 250,000 at 3%. Okay, 250,000 at 3%. And there's our new payment. And look here, 129,443. It's still 51.777%. All 3% mortgages are 51% mortgages. Now, how do they do that? You're going to learn it right now. So I just did that so everybody can have a chance to get in and see how the bank is doing that. So let's take a look at payment number one. So we have $250,000 mortgage in here. And on the very first payment, $429 and a penny goes to principal, and $625 goes to interest. Then when we subtract the $429.01, it leaves us $249,570.99. The bank uses this number, does a calculation to figure out how much interest we're going to pay on the very next line. Okay, because we pay less, because we owe less, we're going to pay less interest on line 2. All right, and it goes, the interest cost goes all the way down from $625 to $623.93. Oh my gosh. And then the next month it goes down to $622.85. Now we're going to see how the bank does that. So we're going to put a calculator on the screen. Clear that out. All right. So now we're going to take our 3% mortgage, right? And we're going to put it into our calculator as a decimal. So that's 0.03. Now that's 3%. We divide that. So we divide that by 12. That gives us 0.0025. So the bank takes 1/12 of the interest rate and then multiplies it by the unpaid balance. So we're going to put in now, we're going to multiply that by 249,570.99. So let's multiply that by 249,570.99. And if we do this right, it will give us the interest on the very next line, which is $623.93 once we round it up. See, it's 927. So it rounds it up to $623.93. That's how they do it. So it's not 3% of your mortgage. It's 1/12 of the interest rate multiplied by the unpaid balance 360 times. So it's not one mortgage, folks. It's 360 separate mortgages here. That's why it's so doggone expensive.
Oh my God.
Drop the mic. I can't drop it because it's suspended here. If I had a mic in hand, I would just drop it right about now. Folks, this is what we're talking about. These are the things we're not taught in school. We get a low interest rate and we think it's a low interest cost, but it's not. Listen, let's knock this thing down to 2%. Okay? Because that's what they're hovering around now. 2%, and say, oh, let's get this 2% rate and we're saving money. Why is the 2% rate better? The only reason that we can really come up with, if somebody is asked that question, it's better than 3%. That's the only thing we can come up with, because even at 2%, we're still going to pay back 33% of what we borrowed. 2% still isn't 2%. On $250,000, they still want $82,658. Folks, why do that? Why do that? So we can cut that interest cost by 75%. Pay 1/3 of the interest cost, not the whole thing. Pay 1/3 of it and get out of debt faster. This is what we're talking about. So here, listen, another thing that just now that we're on this subject, Kurt, you see here, I want to show you something. On a $250,000 mortgage, okay, based on what we've learned, our principal payment is $507.38. I've done this multiple times on this show where we would prepay a certain amount and save the interest. So if this is January's payment, all right, Kurt? Now this is a 2% mortgage.
Yeah.
All right. And then if our next payment is $508.23, that's the principal payment on line 2. That would be February's principal payment.
Yep.
So if we make our January payment and prepay February's principal payment of $508.23, give that to the bank in January as well, we're paid down to line 2 in January. So the bank never saw the $249,492 to charge us that 1/12 of the interest rate on. So we skip right over this $415. We never have to pay that. We drop down to line 3. And this is our new payment. We just saved $415.82 by doing that. But that's not the point I wanted to make. The point I wanted to make is everybody's trying to get the lowest interest possible, lowest interest rate possible. So if we were, do you see this, Kurt, for line 12?
I'm looking at it. I'm looking at it.
$6,144.72 here. That's how much principal is paid down in 1 year. So do we have to give the bank $6,144.72 in 12 monthly installments?
We do not.
No. If we had it, could we give this to the bank in 1 installment?
You could.
On line 1. Could we be paid down to line 12 in just 1 month?
Yes, you could.
All right. And we would save this interest, wouldn't we? We wouldn't have to pay all that interest, would we? Now, here's the thing, folks. This is at 2%. So $6,144 knocks out about 12 payments at 2%. But if I have the same loan, okay, $250,000, okay, at 4%, we're doubling it.
Yeah.
At 4%. Okay. Now look at it. Because see, when you attack a loan, you attack the loan with the principal payment. The interest that we skip doesn't matter. So now look at our principal payment, Kurt. What are our principal payments now? They start out at $360 and $361. Let me make this just a little bit bigger. Okay. Same amount of money. Okay. But look, if I were to prepay $6,000 now, look where it takes me.
Almost midway through the second year.
Come on. So is it easier, Kurt, to pay off the loan faster with a higher interest rate or with a lower one?
Higher. I mean, from what you showed, the higher interest rate will get you further faster.
It goes against everything we've ever been taught. Everything we see. This is what I see when I see this thing. This is what my Asperger's brain does. I see this and I say, why? Why fight to get the lower interest rate when it's much easier to come up with $361 to eliminate one payment than it is to come up with $508 to get rid of the one payment.
My word.
What? So why is everybody trying to refinance to get to a lower interest rate? The bank knows that they just made it harder for you to pay the loan off faster. But they're not teaching the loan officers that.
Wow.
They're not teaching it to the loan officers. The bank owners know it, but the loan officers don't know it. And you've seen it here for yourself. Keep replaying this. Show this to your friends as they get ready to refi, and then have them call us. All right? Who's next? Oh my goodness, I'm
As a
so
matter
tired.
of fact, Don, if they come off script and tell you these things, they can lose their jobs.
Even if they do know it?
Yes.
Wow, wow, wow.
Yeah.
Even if they do know it, they're not going to tell you.
The folks online are just saying thank you, Don. Mind-blowing stuff. Myra says, I wish I knew this before my refi. Jared, we're done with our questions online. I don't know if you have anything in the clubhouse room there, but man, my mind is blown all over again.
Hey, Kirk, thank you for that. And thank you for everybody that's streaming live on the Simulcast for being here. We really appreciate you. We actually have Key on the stage right now. And so, Key, thank you so much for coming up. And please let us know what your question is.
Hello, my name, of course, is Key. I don't have a home or anything, but I always say that I don't want to have a 30-year mortgage. I don't want to pay for that long. When I first bought my car in college, I paid it off in 4 years of like this 6-year thing. So I didn't catch it from the beginning. I wanted to have more information on the full process. I didn't hear the beginning. I just heard the most recent part, which I've already shared with my friends in regards to paying $1.27. So I'm soaking up knowledge, and if I could hear like from the beginning what you guys actually do, that would be great.
Okay, so I'm not quite clear on your question. Could you restate, please, Key?
Break it down for us, Queen.
So in a nutshell, I came in, I think, in the middle of the conversation regarding having the 7 to 9 year mortgage.
Right.
I didn't hear on how to get there or what your the role was to get to that 7 to 9 year instead of the 15 and 30-year mortgages. I only heard the back end of the interest.
I got you. Okay, so
yes, sir. I'm sorry.
No, that's not all right. That's okay. Are you able to see our examples right now?
I am not.
Okay, so you'll be able to see it on the replay. All right. Okay. So you want to go to the button at the top. You'll see it's ice10klive.com, and you'll be able to watch the replay. But if you're near your iPad or your computer, you can type that in and watch this as we go through it. I'm going to do it very quickly for you, Queen. So here's what we're talking about. All right. So once we understand how to read an amortization schedule, I'm just going to give you the overview. Here's the overview. We have a $250,000 mortgage in here at 4%. All right. The payment on this is $833.33. The bank wants $179,674.40 interest on a $250,000 loan. That means they want 71.87% of what you borrowed. So all 4% loans are 71.87% loans. We learned that all 3% loans are 51%. Wow. 4% loans are 71%. 5% loans are 93%. And 6% loans are 115.838%. You're actually going to pay more in interest than you borrowed in principal on a 6% loan. Oh my God. That's what's going on. So let's take a look at how this happens, Ms. Key. We're showing here is that the first payment, principal payment, is $360.21. the first interest payment is $833.33. But if we call that January, Miss Key, and we can actually see on our schedule that the next payment, the next principal payment is $361.41 for February. But there's no rule that says we have to wait till February to give the bank the $361.41. We can actually give that to the bank early if we want in the same month on top of our regular payment. If we give them the extra $361.41, then the bank has to recalculate and do a new amortization schedule. And now our next mortgage payment is on line 3 of our schedule. So we're compressing the amortization schedule. Payment number 1 is now touching payment number 3. We got rid of payment number 2 for only $361.41. And the interest that we would have paid, $832.13, we've just canceled. It was listed to be paid, but now we're not paying it. We just canceled that. And I want to make this very clear. There are some folks on some stages that said you can't cancel interest. I'm trying to show you that's exactly what happens. If it's scheduled to be paid and then you don't have to pay it, you just canceled it. All right. So Ms. Key, does that kind of make sense to you?
I understand completely. That's almost a similar logic I worked with my car. I just didn't understand the verbiage and what I was actually doing. I would just make 2 payments in 1 month, and I would say put it towards my principal balance. And it worked that way. So you just put it into words, honestly.
So here's what we're talking about. I also want to point this out since you brought that up. There's a guy in Miami right now. He's down there with Kurt with 10K, with Sean 10K. His name is Calvin. All right. And Calvin is an entrepreneur, and he does Turo cars. He does, real estate investing. And I'm talking about, he does some really big stuff when it comes to real estate investing. It makes a lot of money. He actually has a Maserati. Okay. So let me ask you, I've never touched a Maserati. I've seen one. I've never sat in one, but I've seen one. All right. I know they're quite expensive cars. I know you can spend between $100,000 and $200,000 on a Maserati. Here's my next question. Can you get a 30-year loan on a Maserati?
Not at all.
Not at all. So if you can pay off a $200,000 Maserati in 6 or 7 years, how come you can't pay off a $200,000 house in 6 or 7 years? Boom! I'm done.
My God.
I gotta share that last 30 seconds.
Miss Key, do you see what we're talking about?
Definitely. I'm about to follow all of y'all so I can be informed of the room. It's my first time in a room like this with you guys. So I appreciate it and I love it here already.
All right, listen. Well, I can tell you it's not going to be like one of those COVID rooms. I can tell you that right now. You're actually going to learn some stuff here.
Ooh, shots fired.
Ms. Keith, thank you very much for your question. But listen, we love what we do here, telling people the truth about how money actually works. Listen, folks, stop paying retail for your money. Get your money at wholesale. We can show you exactly how to do it. And somebody asked Kurt, I think they asked 2 days ago, how often do we update the program? Okay. Now
a few days ago.
You have this program, and you saw that that this is the new look of the program. So you actually get to see the old look and the new look. So in fact, it was that morning that this went live that they actually asked me the question, but I couldn't say it then because it wasn't live yet. So it's live now. So we're constantly improving how the program works. So how often do we do it? Often. We have people that do nothing but research and development on this program. All right. Now, do I know how to code? Do I know how to write computer programs? You better believe I cannot. Don't know the first thing about it, don't want to know. But there's some people that work for us that do, this is what they do, and they're good at it. All right. And we're constantly developing. When we first came out with this thing, we were saying you could pay off your mortgages in 10 to 12 years. That was way better than 30. Now we're saying 7 to 9 years. That's and right. Student loans can be paid off in 5 to 7 years. We're also telling folks that if you have a church with a mortgage, okay, get ready for this one. This is a clip. If you have a church with a mortgage, that church can be paid off in 5 to 7 years without extra giving from the members.
Mercy.
You know how we pass
about
those?
to end the drives that all of our churches have to burn the mortgage? You're about to mess it up? Okay, go ahead.
Okay. So
we've all been a part of them.
Listen, we don't have to. We don't have to do all those drives. We don't have to do the pledge cards. We don't have to do to be able to pay the mortgage off. Do you see what we're talking about, Kurt? Listen, I want to show something here now that we're on this thing, because there's some mortgages out here. There's some churches out here. There's some folks that in the audience who have a church with a mortgage. Okay. So we're just going to add a 1 here, 1,250,000. We're going to put in around 5%. Okay. And then we're going to put in 300 payments, because you can't get a 30. They generally don't do 30-year mortgages. They do 20 to 25 years. Okay. Here's the payment. So now I work with some churches, and the churches that I work with have what's called a reserve fund. Okay. So it comes from the regular giving of the church. Okay. It's just the regular giving. Okay. Right. So when it comes to church speak, and Kurt could tell you, in church speak, they refer to the members when it comes to their tithe and offering. They call them giving units. Okay. Giving units. How many giving units do we have in this church? And because of that, we're able to take care of all the ministries that the church is involved in. Keep the lights on and the carpet clean. And the mother's room. We got all of those things going on in the church that need to be paid for. Plus, we have a reserve fund just in case something happens wrong. So I got a church here. They've got $100,000 in their reserve fund for emergency in case maybe the air conditioning goes out or whatever. They've got $100,000 in the reserve fund, and they've got about $5,000 from their from the monthly giving that goes into the reserve fund monthly, about $5,000. So instead of asking the church members to give extra, all right, okay, watch this. Could they take $25,000 from the reserve fund, Kurt?
Mercy.
Apply it to this mortgage and knock off a year's worth of payments.
One time.
And save how much interest?
$61,914.67.
And if they're putting $5,000 into the reserve fund monthly, how long is it going to take them to pay themselves back the $25,000 that they took from the reserve fund? How long is it going to take them to pay it back?
5 months.
5 months. Kurt, if once they pay themselves back, could they do it again?
Yes, they could.
Pay them back.
Wait a minute, you just messed up a whole lot of pastors' yearly church drive that happen right now for the new year. Oh, Lord Jesus, don't let us go to hell. Lord, forgive us.
5 months.
Where's coffee?
Actually, you know what? I'm gonna give a different perspective. Now the drives can go to other value adds, like helping the families in the church.
Come on, talk.
Come on,
programs for the church instead of paying off the mortgage. So we're gonna bless people with this information.
Woo!
That's right.
Woo.
Hey, let the church say amen.
Let the church say amen. That's what we're talking about, folks. So you don't have to wear out the saints. Mercy. You've already got the money. We're going to show you how to use it. And now you can put more money towards ministries just like just oh man, I just get so excited I don't know what to say next. Okay, Jared, you're exactly right. You're exactly right in what we're talking about here. And if we could pay themselves back in 5 months, we could do it again. This is how this church can be paid off using the reserve fund that they already have at current giving levels and be paid off in about 5 to 7 years without
Wait a
extra
minute, I
money.
need the blessing. Dr. Joanne, you in ministry. Do we have permission to keep going, Dr. Joanne? I just want to make sure I throw it out. We need some covering.
Good morning, everyone. Covering is what you need. Covering is what we got.
Come on, Dr. Joanne.
Thank you, Pastor. Appreciate you.
Listen, folks, here's what we're talking about, folks, and before, in the last couple of minutes here, for all of you that that go to church, for all of you that are believers, all right, and I just want to say this: we all know about the tithing system, all right. We know about the 10%. If you know about the 10%, flash your mic if you know about 10% tithing. You know anything about that? Okay, so we talk about that, all right, and we talk about, and who does the 10% belong to? I'm not going to say it. I just need you all to say it. Who does the 10% of our income? Who does that belong to?
God, Jehovah, Yahweh.
Okay,
yes.
So we know not to mess with the 10%. Is that right, Kurt?
Come on, that's
okay.
That's it. What we've heard
So
all our lives.
We spend so much time talking about the 10% and making sure that we don't violate that. But you know what we don't talk about, Kurt?
There it is.
We don't talk about how to manage the 90%. We talk about the 10%, but we don't speak about how we can best understand and manage the 90%. That's what stewardship is all about. Stewardship is about managing all of the gifts, all of the resources. And we spend very little time talking about how to manage the 10%, but the 90%. Here's what I want to say, folks. If 9 out of 10 people you know, and that includes the people in your church, if 9 out of 10 people you know will never, ever pay off a mortgage, and they're paying 75% more interest than they need to, and I'm even talking about gospel workers that give their whole life to the ministry, go into retirement in debt.
Mercy.
Because we don't understand how the 90% works, because we're not taught. How can we teach what we have not been taught? This is truly the blind leading the blind. So, folks, we're here to set this candle on a hill. We're here to set this light on a hill. We want to take the basket off of this light so that people can see the truth about what's happening here with their money. So we're going to show you how we can gather up the fragments, just these little bits of money. Okay, gather up the fragments that nothing be lost. And by the time we're done with this thing, we're going to have 12 baskets full of interest savings.
Come on, preach.
Moderators,
Don,
back to you.
Don, I'm sorry. This is Tracy. I just want to interject because what you're doing is so very important. My mother is 83 years old, and she's still paying on the mortgage on a house that she bought when she was 25 because of refinancing. When my father passed away in 2004, she refinanced. I mean, and they constantly, refinance their home. And this is just critical because, to be 83 years old and still paying a mortgage on a home that you bought in your 20s is just incredible. So thank you for what you're doing. This is absolutely life-changing information. Thank you.
All right, folks.
Wow.
Are we done with?
I did all that.
Go right ahead, please.
Can I ditto that? My mother's in a similar situation, and I'm just determined to get her mortgage paid off. This is Dr. Joanne A.J. Scott, and she's 86. So Tracy, I can truly relate. And I also want to say that after the conversation I had with you, Don, probably about 2 weeks ago, when I was talking to you about whether I should pay off the credit card, take the money and pay off the credit card, because it's zero interest right now. And when the interest rate starts, that I wanted to have paid that down. And the advice you gave me and the illustration you showed me of the advantages of why pay off a credit card when you can pay your mortgage down and still have money. That was like an epiphany. It was like a light bulb moment. It was like, aha, oh my God, you know. And the truth of the matter is, I majored in economics in college. That's what I got my bachelor's degree in. I have leveraged the banking industry for years with knowledge, but that one tip right there changed the way I handle my credit cards right now. So I just want to say thank you, ladies and gentlemen. If you have not connected with Don and the P.I.L.L method, right now is a great opportunity to do that. Go ahead and click up there on the top, get that book, get in the program, and change your life. I am Dr. Joanne A.J. Scott. Mic dropped.
Have mercy. What can I
You
say
see why she
to
had to
that?
co-sign all that.
Well, folks, we come to the end of another 2 hours. Moderators, it's on you.
All right. So thank everybody for being here today. If you haven't already, make sure you click that greenhouse at the top, follow the club, and then also make sure you click on Don's profile, give him a follow, click on that bell next to the follow, and click the always on notification so that if he pops on to stages and other rooms with that focus on real estate or financial literacy, etc., you will be alerted and you can get some more insight into the P.I.L.L method. Also, make sure that you click on the faces of all the moderators on the stage. They all curate amazing rooms on Clubhouse, and your hallway is curated by who you follow. So if you're not following Kenyatta, the Y CEO, Credit Goddess, Kirk, Tracy, Valley, Roberta Moore, Dr. Femi, Bruce, Dr. Joanne, 10K Cars, or Coffee Brown, you may miss out on some amazing rooms that they're doing, and you do not want to do that in 2022. And before we go through moderator outros, I would love for Don just to reiterate how people can get in touch with him to figure out the year, month, and day they can be debt free. Then also tell them how they can get the best stock and stuffer they could ever give their family and friends with his best-selling book, The P.I.L.L method. So Don, over to you.
Ladies and gentlemen, please, working really hard over here to get this information out to you. So go to ice10k.com. And then once you get there, okay, click on the button that says get a savings and earnings report. Come on. Once you do that, fill out all the information there, follow all the instructions. Someone from my staff will call you and confirm that information and set up a consultation for you. You will know at that point the month, day, and year you could be debt free, how much interest you can save, and how what you can do with those interest savings and turn it into generational wealth. Instead of giving it to the bank, invest it in your family. All right. Not only that, but remember to get the book right now. Right now. Do this right now. Click on ice10k.com and get the book. Kurt, will you put up that for us? So here's what it looks like, folks, so that when you go to Amazon, you'll be able to see it. Go to and click on the book right now. I'll get that book. And for every book you get for your family, it's an investment in your future. Stop paying all of that interest and cut it by 75% and invest in your future and in your family's future. For every book that goes out, you will be able to get a 10K card or a digital business card for every book that goes out. And Kenyatta is going to go over how you can get not only the book, but your 10K card as well. Ms. Kenyatta, are you in the house? Okay,
Yes, I'm right here.
Okay.
So I'm Kenyatta. You can find me at kenyatta10k.com. And again, I'm your real estate broker out of the state of Illinois, as well as your financial service provider, assisting you with your rehab loans and your business purpose loans and everything in between that makes money. Connect with me, and I would love to work with you. It's been a pleasure. We've always appreciated the presence and hope and pray that we've earned the privilege of your time.
Sean, 10K, if you're in the house, why is it so important for this card? Why is this such revolutionary, groundbreaking, and disruptive technology?
I mean, Don, it's very simple. When we started a business, we wanted to solve problems. We wanted to meet people. We wanted them to know exactly who we are, what we do. And what a 10K card does, it puts everything all in one place. So instead of you having to go on Google, go on Yahoo, go on all the different channels to find an individual, you go to one central point, get their contact information, and then you'll be able to reach out to them, cross-reference them, check out their testimonials, and then make a decision whether they're the right person to do business with. So if you want your customers to vet you much faster, put everything in front of them. Why? They will look for you. Why not make it simple for them to find what they're looking for? And after they finish their vetting process, they will choose you to be the one to move forward doing business with. So if you haven't already got the 10K card, guys, go get a copy of the book and then follow the instructions on the card. Click on step 2, click on I'm ready. Get your life together, guys. You know, getting the information is one thing. Taking action on the information is a whole different ballgame altogether. So get in the game, guys, and swing it back. With that said, Don, back to you.
All right, Jared, take us home.
All right, cool. So we're going to do quick 30-second moderator outros. So just let people know what you do and how they can get in touch with you. And I want to thank everybody that's in the room today. Also, if you're in Clubhouse right now, I would love for you to click the link at the top and make sure you follow Don on Facebook, YouTube, LinkedIn, and Twitter. Don will be giving unique value to his community on those platforms as well. So you make sure you tap in with him on those platforms. So my name is Jared Alden. I am been in the tech space for 15 years. My passion is increasing diversity in tech. So if you'd like to see what I do on all social media platforms, feel free to check me out at jarrett10k.com, RRETT10k.com. And if you want to check out what I do on Clubhouse, just click my bio and check out my replays. I do a lot of things on generational wealth and Black excellence. That being said, I'm going to pass it to YCEO.
Hello, hello, everyone. I am so happy that we had this room today. We always learn something new. I'm the YCEO. You can find me at YCEO10k.com. And I've been working in the financial sector now over 20 years. I hold several master's degrees, and I also speak at conferences, but I'm about to move into the coaching space. So I'm really excited about what's coming. I've spoken on national platforms, and I really look forward to helping you specifically level up your business and run it very professionally and build those collaborations. So you will see a lot of other women on this stage who I work with. Everybody here is absolutely amazing. And guess what? We see each other off the app as well. We talk off the app, not just on the app. So we're in real connected business and personal relationships. So make sure you tap in and follow Jared. Jared goes into some amazing spaces. If you want to know about the metaverse, you want to know about what's really going on with crypto, follow Jared. And you can follow me and again, meet me at YCEO10k.com.
All right, Credit Goddess, are you with us?
Hey everyone, again, awesome room today. I love all the questions that were being asked and answered, because again, I learned from it as well. If any one of you guys that want to reach out to me, I'm Rosalora Lewis, also known as the Credit Goddess. I am a credit score improvement strategist. I not only help you repair, but I also help you improve. So if any of you guys that are interested in any of my services, whether it's personal credit, business credit to grow and scale your business, funding Also, definitely tap in with me at creditgoddess10k.com. I prefer that you book a consultation with me so that way I can help you dive deep into your credit issues and how we're going to improve. If you choose the detailed credit analysis, we would do a detailed report and show you what's affecting your credit and how we're going to improve it. Whether you think you don't need it, you may need it. This will help you give you an eye opening of what you need to get improved. So that way you can get access to funding and then apply the P.I.L.L methods tactic on saving on interest costs. That's what it's all about. This is the key to accessing other people's money and building generational wealth. So definitely tap in with me at creditgoddess10k.com. Thank you guys so much. And I want you guys to have a wonderful weekend. And next week, a prosperous week. Thank you for having me. Bye.
All right, all right. My name is Kirk Nugent, and I have the privilege of working with Don and the awesome team that is on the stage here to produce this show, the show that you're seeing and visually watching online, whether you're on Facebook, YouTube, LinkedIn, or Twitter. What you are seeing, my team here at Composition LLC, we're working with the P.I.L.L method to be able to broadcast that. And that's what we do. We like to help folks understand, deal with two different problems. That is authority and visibility. Authority and visibility. You want to be able to broadcast your greatness. You want to make sure that people don't think you're the best kept secret. You want to be able to go live with your message and putting your message out there in a way that allows you to share your passion, your energy, and your expertise on a specific topic. Live video strategy might be for you. So check us out. My link is on the screen, kirk10klive.com. I'm excited to be able to meet up with some of you guys. Take care.
Good morning. This is Tracy. This has been so fabulous, Don. Thank you so much. You know, I was thinking about the quote that says, an investment in knowledge pays the best interest. And you have definitely given a lot of knowledge today. I'm a financial educator. I educate women about money and how money works using insurance strategies, specifically divorce and widowed women, because my grandmother is a widow. My mother is a widow, and I'm just very passionate about helping widows and divorced women specifically, because you know we have to be good stewards with our money. And oftentimes, you know, we're not. You know, we don't have financial goals, so we need to set, you know, financial goals. We need to come up with strategies to get out of debt. And Don has definitely given us some strategies today that we can all, employ. And my crusade is to help again widowed women and divorced women to come up with strategies to get out of debt, as well using insurance as a vehicle to create generational wealth. Thank you very much for allowing me to share.
Awesome. My name is Valerie Sears Jones. I am here in the Dallas DFW market. I'm a licensed agent and I am all things real estate. So one of the things I love is that, and Tracy, I love that quote that you said, because I was going to come with one. And one of the things I love to say is, wow, like what opportunities work. And everything that Don shared this morning is phenomenal. And it works. It's just a matter of implementing it. It's a matter of processing it. I know it sounds so unreal. And every time I come to the room, it's amazing. I always learn something new, and I sell a lot of real estate, but it's amazing to me. So Don, I just thank you so much for your knowledge, that how I'm able to take that and share the information with my clients. So thank you.
This is Roberta Moore, President and CEO of Moore Incorporated, and my motto is health is wealth, meaning that you need to be healthy mentally, emotionally, spiritually, financially, and all other ways. So, Don, this information was powerful because knowledge is power, and it was phenomenal. So I started my company in 2002 as the only one of 8 as an entrepreneur, the only one of 8 that has an advanced degree. And we need this knowledge in our community. So I provide healthcare staffing for the federal government, professional services, as well as allied health. And so I provide employment opportunities for our community. And Don, you are helping us to get out of debt. I am so thankful for this opportunity and I really appreciate it. I look forward to continuing to work with you and learning more. And as African Americans, we know how to make money, but we don't know how to make our money work for us. And so this information is powerful and we need to keep moving forward. 2022 is, I decree that it's going to be prolific for us and for our people. And thank you again. I'm Miss Amore. I'm done speaking. And if you'd like to follow me, you can follow me or find me on Amora, AMOORER 10K.com. 10kcard.com.
10K.
Make sure
10K.com.
10K.
Yes, 10K. 10K.com. Thank you, Sean.
You're super welcome. Hey, Jared, look, one of the things I'm super happy with, right, is when you're on Clubhouse and you're speaking to your audience and your audience is actually being poured into and they appreciate it, all they have to do generally is just to look at your first name and add 10k.com at the back of your first name, and then they'll find you. So it's one of the easiest ways to get connected on Clubhouse, and most importantly, keep your message relevant to your audience, your client. So that's us, that's what we do, and we're so happy and grateful to be in a position to help to connect audience and professionals, and that's what we're expanding on, guys. With that said, another great room here as usual, and if anyone want to get their 10K card, go get the book from Don. If you want to upgrade your card, send me a back channel, and we'll take it from there. With that said, have a wonderful, wonderful Friday, guys.
All right. And Coffee Brown is out working, but definitely make sure if you're in Clubhouse to give her a follow on Clubhouse. Check out her Avi. She has a masterclass coming up, so definitely check that out and tap in with her if that's something you're interested in. And she's also a 10K card member. You can reach her at Coffee, KOFFE 10K.com. All right, so Don, I'm going to give you the last words, and then let's play out your music and good weekend.
All right, folks, listen, it's been another fabulous room. I want to...
The next room will be on Sunday at 9:30 a.m. Eastern time. So make sure you're following the club so you can check out the carousel of all the upcoming rooms. All right, back to you, Don.
Listen, I want to thank every single moderator on this stage. I'm telling you, there is a wealth of talent here that we curate. If they have a green bean, that means that they're vetted and that the information is superior. You want to tap in with the folks on the stage and to get some really good information for yourselves and change your life. Okay, take action, change your life. So anyway, we'll be back here on Sunday and doing the same thing. We're going to be talking about more examples. We're going to be taking more questions, and we're going to be doing it live. It's unscripted. We don't know what's going to happen. You don't know if somebody's going to come up with a question or something that's going to help you. So bring your questions, bring your ideas, bring whatever, bring it to the stage, and not only help yourself, but help others. I'm looking forward to talking with you on Sunday. Thank you so very much. Oh, by the way, don't forget to click on ice10klive.com, ice10klive.com, and get your tickets for Clubhouse Live, the mastermind, which is coming up in Miami on January 5 through 8. We will be in the place. We will have a breakout room. You can come and visit us live in the place, and we're going to have some fantastic giveaways in that room. I can't tell you exactly what it is, but kind of picture in your mind an apple with a bite out of it, and it'll give you some idea of some of the giveaways we're going to have in that room. You want to be there and get some of the giveaways along with some of this fabulous information on changing your life financially. Folks, thank you so very much for the privilege of your time. You could have been anywhere else, but you were right here, and I appreciate it. I'm looking forward to seeing you on Sunday. Jared. Oh, I'm sorry. Outro music. All right. It's on you, buddy.